the taxes. Okay. So one of thing I'm finding with our community is, I know we are earning a lot of income, but unfortunately we are paying lots and lots of taxes to IRS. Okay, so I'm going to quickly walk through what's happening with the taxes. Okay, tax savings. Okay, so if you look at this spreadsheet, okay, so again this is a hypothetical scenario, but this is a kind of a reality picture what I'm seeing most of our guys. Okay, so let's take a tax year 2021. Husband earned 90K, wife also let's say 90K, so the total family income is 180K, right? Let's say for the sake of assumption they didn't contribute anything to 401K or HSA or anything, so your taxable income is 180K. And because of the recent tax law changes, most of us are eligible for the standard deduction. So for a family, standard deduction is $25,000. So now our taxable income is 155K, right? So your projected taxes for 2021 is going to be actually $27,000. Because the reason is, I'll show you the next slide. So this is the tax rate for people who are filing jointly, right? So if you look at the table, for the income of 180K, your tax rate, it's going to be 24%, right? So for that, let me go to your spreadsheet. So almost you're getting closer to your liability is going to be almost $27,000, right? But let me plug in the numbers. For 2021, actually you would have contributed $19,500, the husband, and also the wife also can do $19,500. So that's, remember, the 401K contribution is considered as a pre-tax. So it's going to save your taxes. So immediately, did you guys watch that? So before your tax was $27,000, now it dropped to $17,000. And let's say if your medical insurance eligible for HSA, health savings account, that also you would have done $7,300. So that again reduces your taxes to $15,000. So that means your savings, you would have easily saved $12,000 by doing these two simple things, right? And look at that. Now your taxable income is 108K. So guess what? If your taxable income falls below $125,000, then you will be eligible for traditional IRA, which is an independent retirement account, not through employer. So you can set up a traditional IRA and contribute $6,000 each of you. Okay, then that also will save additional taxes, right? Then your so that's another $12,000, right? So that's your taxable income will again further reduce by another $12,000. So you can see another $2,000. So by doing these things, see that you would have saved $15,000 easily by using your 401K, HSA, traditional IRA, right? So imagine if you can do this for every year, right? So I'll show you the another math, because these are the things people fail to do that. So look at this math. Even if you can save $5,000 tax savings every year, right? And you just invest in index fund like VOVA or Equivalent or any other index fund. If you can do that for 20 years or 30 years, that's worth $500,000, right? Let's say if you can save $10,000 taxes every year, that's worth $1 million, right? So not many people know that. It's a simple financial compounding benefit, and many of us fail to take an advantage of it. People thought process is short-term focus. Okay, people, okay, it's only $5,000. Okay, who cares? Let's pay to IRS, right? Or it's only $10,000. But what they fail to realize is they are doing this every year. They are repeating the mistake every year, right? And the reasons they again provide, it's a very silly reason. Okay, I'm an H1, I'm an H4. I don't know, I may go to India or may not go to India. Forget about that. Okay, whether you are in H1, L1, doesn't matter what visa you are in. It's your hard-earned money, right? Why you want to pay this much money? Even billionaires, you guys know Trump paid only $700. The billionaire, millionaire are paying $1,000 taxes or even not paying any taxes. And why are you paying these much taxes? It didn't make sense, right? So please spend time and don't do this. I know that right now the 2021 deadline is April 18th, and you can also extend to actually October, right? So don't wait until the tax deadline, okay? Before, even far before, let's say if you are going to work on 2022, start now, okay? Plan for your taxes. Think about what are the things you can do, right, to minimize your taxes, okay? I know it's very, for if you are working in W2, I know it's very difficult to avoid all the taxes, but still I showed you by doing simple things, right, you can save lots and lots of taxes. And remember, repeating this, that's the power of compounding. That itself, that's all you need for your retirement savings, right? So that's why it's very, very important to try to save your taxes. Then what are the strategies, right? So I'll show you. And another thing is the capital gains. I know some people ask, if whether it's a stock or real estate, if you are going to sell less within a year, everything will get reported as a regular income. Then you are going to fall under the higher tax rate, right? But if you hold it for more than a year, then depending on your income, look at that, up to even 500K, your tax rate is 15%, which is more better than your 24% tax rate, right? So that's why aim for long-term capital gains tax rate. Okay, then how to save these taxes? For personal level, as I already told you, definitely sign up for 401k. Right now for 2022, you can contribute up to $20,500 for age below 50. And if you are above 50, I think you can even do another $6,500. Okay. Then, as I said earlier, go for traditional IRA if you have still your taxable income is less than 125K. So you'll get the tax benefit. If it's about 125, then go for Roth IRA, which is an after-tax Roth IRA. The good thing is about Roth is the investment gains from Roth will be never taxed at all. And so that's a powerful benefit for the Roth. Then do the HSA. And then also for the college savings, 529, you can also get the state income tax benefit. For example, like in Maryland, we get $5,000 for a kid. For Virginia, like $4,000. And for some state, they don't provide the state income tax deduction. Like I know the North Carolina doesn't, but I would still recommend to invest for your kids under 529 because the gains will not be taxed at all as long as you use it for your education purpose. And when it comes to 401k, what I'm finding is a lot of our people, they don't fail to contribute. The reason is, again, I said, because of the H1 and other reasons. Or some people, what they do is they only match what the employer match. That's also not a good strategy. So I would recommend whether your employer matches or not, please definitely contribute this because it's your money. Even if you go to India, you can, after 59 and a half, you can take that money or even before you can, if you take, obviously you have to pay the penalty. And you can, once you quit the job, or you can move it to the rollover IRA, you can just leave it there and grow the money. So that way you'll get the exchange rate benefit also. So I still strongly recommend consider all these tools if you are working in W2. Then let's say if you have an LLC, then you can consider whether you can get the income through 1099 or corp to corp or S corp. So that way you can even use the SUP IRA or solo 401k. You can deduct up to maximum, I think, somehow $61,000, right? So the deduction is much higher, so you can save even more taxes also. Okay. So and plus by doing the LLC, you can also write off a lot of eligible expenses too. Okay. So again, as I said, I think I also did a very specific sessions about this LLC. If you go to my Facebook, I'm quickly going to show that here. I think, yeah, if you go to my Samatva Wealth Management Facebook, I think it's at the top, there is a tax savings and LLC, S Corp. So how to set up and how. So please listen to that. That's another 1 hour session. There is a lot of information I have discussed it. And also for the folks, I know there is Vijay Morgan, a nice guy from our community. He's doing a YouTube channel, and he posted a lot of very good videos about whatever I discussed so far: 401k, IRA, 529. It's all very short-term videos, like a 10-minute videos. Please watch those videos. It's a tremendous wealth of information he shared. Okay. So that you can use those information for your advantage. Okay. And also under my Facebook also I've posted a lot of other videos also. I know today we may not be able to cover all the information, but there are a lot of video session I have conducted for the Indian Association for Nebraska, and also about the NRI funds repatriation. So please watch those also. Okay, so you can get a lot of information from those. Okay. Then quickly, the another topic is annual employee benefit package. So when you work for an employer, remember every October they send you this benefit package. So please spend some time to sign up all these benefits, whether it could be a 401k, medical insurance, the life insurance. Remember I told you earlier, please sign up not only for the basic life, please sign up for the supplemental life also, the basic and voluntary AD&D, spouse life insurance. Yeah, definitely sign up for the short-term disability and long-term disability. It's a must. And also, if you haven't done a will, then sign up for the legal service plan. I've seen a lot of employers provide this benefit. What it does is you can hire an attorney through this plan, because you only pay $5 something for this plan. It's very cheap, but you can do your will, power of attorney, living will, even trust, a lot of things you can do it through this. And also you can take an advantage of the employee stock purchase plan and RSU and stock option. And yeah, for those people who has the restricted stock unit and stock option, I know the people who work in Silicon Valley area have some plan, because these RSU stock options will trigger a huge tax liability when you exercise, right? So I would strongly recommend consult a financial advisor or CPA, or reach out to me. I can help you with you to try to mitigate those tax liabilities. Otherwise, you're going to end up paying huge taxes down the road if you don't plan it well. Okay, then this is a very basic thing. I know a lot of you guys probably already doing it. Budgeting. Make sure that track your income and expenses. And if you want, I've created some spreadsheet. So this is one spreadsheet I am just sharing it to you. So basically, you just track your monthly income and expenses. So that way, it will tell you how much your savings, whether if not, whether you're in red. So that it'll plan better. You can plan better and avoid unnecessarily getting into this higher interest debt. Then it'll be very difficult to come out once you get into the loop. Okay. So definitely do the simple budgeting and understand when your employer gives the pay stub, right? In the pay stub, look at what it is. Okay, what kind of taxes are going. And also when you get the W-2 at the end of year, your employer will issue a W-2. That's what you use to file your taxes. So understand, definitely pay your focus on the box number 2. So that's what the federal income tax. So that's the tax I'm talking about so far. So how to reduce the taxes, right? Obviously the social security and Medicare tax, that's a payroll taxes. And also you can see how much your state taxes also. I know some tax state you don't have to pay state taxes, but like California, New York, if you are living, you'll be paying huge taxes, state taxes also. And also understand, so this is the tax you will file, 1040. So when you file 1040, so this is the form you are filling, whether through TurboTax or manually. So when you file your 1040, the one thing I want you guys to focus a lot, pay attention to your line number 15. So that's your taxable income, right? then line number 16. So this is your tax. And a lot of our guys, when they file taxes, the only thing they talk about is, okay, how much, okay, I got a refund $2,000, or I have to pay $2,000 to IRS. That's not the true taxes, right? Look at what it says under line number 16. Look at the total tax, how much you paid. As I said, I bet it'll be in, easily in 20,000, 30,000, depending on your income. It's going to be a lot. So find out about, okay, how much you are paying, then use the strategies what I have shown you before to try to minimize your taxes. Okay. So understand how to decode these 1040 or tax forms. Okay. And as I said earlier, track all the expenses, because for any family, you can see there are hundreds of expenses. So just track those expenses. Okay. Then once you know your expenses, then handle your budget. Let's say then if you have your savings, then beyond your 401k, IRA, then save these, even any excess amount. So start saving those. Okay, even $200, $300, just start saving. Not only saving, then start investing. That's very, very critical. You can invest in like index funds, right? If you don't have time to analyze the stocks, then just put it in VOO or VT. That's the Vanguard index fund. The fees are zero. Just every month, constantly, just keep saving and invest. And so that you don't have to buy and keep selling, because as I said, that's going to incur a lot of short-term capital gains taxes. That by doing the small amounts of money, saving and investment, look at that, over 30 years or 40 years, that will turn into $250,000, $500,000 easily, right? So that's the power of compounding. You have to start sooner, save, and then invest. Okay, so that's very important. And take a long-term view. So look at the chart of the stock market index fund, right? Past 100 years, there is always some crisis, right? Some wars. Even as of now, we all know the Russian war is going on, and a few years back, COVID. And you can see sometimes the market crashed even 50%, right? Don't worry. For a long-term investor, it's a good thing. So whenever the market falls, keep investing more, because that way, when the market recovers, you will get even good returns. And obviously, if you are closer to retirement, then your strategy will have to be different. But for those folks who are in 20s, 30s, 40s, don't worry. Be a long-term investor. Just keep invest. That's going to help you down the road a lot. Okay. Okay, then quickly let me move on to the college savings. I know we are already, I took a lot of time. So for your kids, so I would strongly recommend start some kind of college savings, okay? Because the college expenses are very, very high. Even for in-state, it costs about $100,000. And if you are going for out of state, that easily costs $200,000 for one kid, right? So it's a pretty tough decision. So ask your kids to research what college they want to go. Well, it doesn't matter whether it's in-state or out of state, but ask them to do due diligence. Analyze the college they are going to go, whether they offer a wide range of program. Talk to the past students to understand the teachers' performance, because that matters, right? And find out the internship opportunities, their alumni network, the quality of education, obviously the cost. So, and also find out whether you can use the student loans to support this financial aid. So you have to do all these due diligence before deciding the college. And to cover these costs, definitely go for the scholarship. So ask your kids, because there are a lot of outside scholarship available. You can check this college board, check scholarships.com, and start applying for the scholarship. Then also contribute to the state 529 plans. Then also, as I was explained before, you can definitely participate in the FAFSA, financial student aid, so that you can apply for the merit-based or subsidized, unsubsidized plus loan. These are all student loans. provided by the Department of Education. It's way, way better than Sallie Mae or other private banks loans. Okay. And also due to some reason, let's say if you end up getting into out of state, but don't worry, try to find a way to convert the out of state to in state after 12 months, because I've seen depending on the college you are going, they do offer some rules. So you have to kind of do your work, try to convert that from out of state to in state if possible. Okay, so because that's going to save a lot of money, because the difference between out of state in-state tuition can save you easily 60,000, easily $50,000-$60,000 for 4 years. Okay. And also when you do the FAFSA form, make sure that what to include, what to not to report, because that could impact your financial aid. Okay. Okay, then finally, the NRI who wants to sell your properties in India and transfer the funds to US. As I said, I have done a dedicated session. You can find it from my Facebook. But these are the things you have to do. You have to maybe do a power of attorney, give it to your parents to execute the sale. Then you have to do some assessment, how much the tax is. Then also there is a tax saving option available. I would strongly recommend engage a chartered accountant from India to do this paperwork of filing taxes. And also you have to do a 15 CACB forms to repatriate the funds from India to here. You have to file a form A2. And then obviously you can either transfer from your NRO account to the US account, or through NRO to NRE and then bank account. Then once you brought the funds here, then obviously we have to work with CPA here to file the taxes in US also. Okay. Yeah, as I said, yeah, please go to my Facebook to listen to additional recordings, and also, yeah, definitely strongly encouraged to go to Vijay Mogan YouTube channel. He has lots and lots of great information out there. Okay, to summarize, common financial mistakes. Okay, these are the things based on my experience I found. So please don't these mistakes again. Okay, so as I said earlier, please involve your spouse, part of your family financial investment planning. And another thing is, don't compromise your health to gain wealth. And because only with the health, if you don't health, it's zero, right? So that's why I strongly recommend, because I'm seeing the work-life balance is pretty bad among our Indian community, particularly our IT people. Then save your taxes, reduce your taxes. I think I've reviewed a lot of strategies. So please try to implement that sooner. So save your taxes. And also my recommendation is don't get into these trading options, the day trading, crypto, and playing with margin. It's all too dangerous. I've seen a lot of people, they lost money, they lost their sleep. It doesn't worth it. Honestly. So that my experience. So don't repeat the same mistake. And also don't wait for the market timing. Nobody can predict. We all know that, right? So don't do that mistake. And also don't get locked with these unsuitable financial products like annuity, IUL, VUL from banks and insurance company. Get some independent advisor opinion before getting into that. Because once you get locked, it's very difficult to come out, and you'll be losing a lot of money towards the commissions. It doesn't work there. And also don't delay planning for kids' college expenses, because the college expenses is real. It's going to cost you $500,000 or $250,000. So plan yearly. Don't wait until your kid's ready to go to college. That's not a good strategy, right? And also the retirement saving. So try to take advantage of these 401k, IRA, Roth IRA to plan well, save well, invest well. Don't wait. And never ever make these financial decisions based on peer pressure. That's not good at all. And also, as I said before, have a right financial protection through term life insurance. That's a must do that. And if you have minor kids, definitely do a bill. If you need any help, reach out to me. As I said, you can easily do it through your employer legal benefit plan. And then finally, if you have assets in India, like I said, you don't have to immediately do anything, but have a plan, because it takes a lot of time to repatriate the funds here. If you want to maybe invest it here or use it for your kids' education. So because unfortunately the legal formalities are pretty high in India, we all know that. So that's why have some plan, then work on it accordingly. Okay. Then yeah, finally be